Hello viewers, in this video I'll be going over gold miners ETF ticker symbol GDX. Today we are down 3% and the Fed just cut 25 basis points, and at the moment we do see the Fed not being as dovish as expected. That's why you see a large downward pressure today, but we'll receive more insight as Chairman Powell meets with the media and provides more insight on the decision. So at the moment, we see the 1 hour chart. We have a divergence on the 1 hour MACD. Most likely may be pointing to negative MACD. On the 4 hour chart, we still have not broken the pattern. We are still in a good attempt on making positive MACD. And as long as we close above the 18 moving average, the trend is still intact. And as for the daily chart, we see another support on the 9-day moving average. As long as we do not make lower lows, the upward trend is still intact. And so if we were to make a move higher, that price movement that I see acting as resistance is this 18-day moving average right here at $28.80. As for the support, if we do move down lower, a possible support that I see is around the price of $26.10. Reason why, we have a price concentration that dated back to mid-July, and by that time I do have it has a good chance of the 100-day moving average reaching at that level at that point in the future. So if we were to move on higher, that price movement is roughly around 5.7%. However, if we do move down lower, that price movement is around 4.3% lower. So let's head to the forecast model. On here, I'll go day by day, where GDX will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and the trend that is the best match to the current trend is the one that dates back to August 4th, 2010 to October 28th, 2010. I believe this is the best match. Let me point out why. So what we have here in the beginning of the trend, we remain above the middle Bollinger Band. Really good attempt, but you see several instances where we did touch the middle Bollinger Band, but overall we maintain an average above the middle Bollinger Band. So next we proceeded to head down lower to touch the bottom Bollinger Band right here, and next we see a slight attempt to revert to the mean or to touch the middle Bollinger Band. Not quite yet, but soon. So let's check the trend in question. So we have this trend. We start to see a nice average as well above the middle Bollinger Band. And next we see it break down to touch the bottom Bollinger Band right there. And then after that, we did see a good attempt to touch the middle Bollinger Band right towards the end. So next, we have about, I would say, 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. The forecast model that we just examined was August 4th, 2010 to October 28th, 2010. Back then, gold miners was up around 9%. So we may be able to break resistance. And if we do see a dovish Chairman Powell, gold will most likely head higher. So there's still a possibility. It's still too early. And that is all. If you want this forecast model, feel free to sign up in the link below. And thank you for watching.